Management then of Tata Communications, lots to talk about with respect to the kind of earnings that they've delivered, the revenue growth as well as margin expansion. Joining in on the show is Amur Lakshminarayanan, the Managing Director and CEO of Tata Communications. Appreciate you taking the time out. Firstly, let's start off with your revenue growth. It's been much better. It's been strong for the second consecutive quarter. What have been the factors that have led to this, and which are the segments that have managed to outperform?
Yes, we are very pleased that we have delivered a very robust growth in revenues this quarter as well as in the previous quarter. I would attribute the reasons to the international regions beginning to deliver growth. We had talked about investing in sales and marketing in the international regions, and that is beginning to show results. The second is we have been continuously strengthening our products with new capabilities and shifting them towards the platform, and we have made several launches over the past a few months of new platforms and capabilities into the market, and those are beginning to kick in as well. So these are primarily the two main reasons why we are beginning to see the increased revenue growth in the markets.
And how confident are you that the growth rate that you've delivered is going to sustain into the coming quarters?
In terms of the demand situation, we see that our demand is still quite good. We've been meeting with customers. Our customer engagements are improving. Our quality of the funnel is actually improving in terms of number of larger deals in the funnel have actually increased. While the overall funnel size is similar, while we've been closing more number of deals compared to last year, we managed to add more things into the funnel. Therefore, the funnel size is similar to what we had last year, which is very good. But the color of the funnel in terms of more opportunities in digital platforms, the level of engagements that we are able to have at the C level to show our relevance to them has increased. So with all these, we think that the ability for us to continue this momentum into the future would be there.
Okay, and earlier you had mentioned that the margins might be lower at the lower end of 23 to 25% guidance, but in Q2 you have achieved a margin profile of 25.5%. Firstly, if you can help us understand what helped you in achieving this 25.5% margin band, and for rest of the year, are you upping your margin guidance, or do you expect some sort of slowdown, and that's why you are expecting the lower end of the range of margins?
We have always been maintaining that our margin guidance is between 23 to 25%. We don't actually give any forward-looking guidance at all, either in revenues or in margins. We are comfortable with the 23 to 25% because we are continuing to invest in the front end in sales. We are continuing to invest in our product portfolios. So we would like to keep that range of 23 to 25%. This year, this quarter, we have delivered a better result. Partly you can attribute to the currency fluctuations as well as some gains that we have had this quarter. But overall, given the level of investments that we are doing in products and platforms, given the level of investments that we have to make in the markets, not just in the sales, but including the marketing to promote the newly launched products such as the Tata Communications DIGO, our Move platform in the IoT business, and so on and so forth, we believe operating in the 23 to 25% is a very good range to operate in.
Okay, hold that thought. Let's also track what's happening with Piramal Pharma, because the demerged entity was supposed to list today. There was the expectation that it's going to list around that 200 rupee mark. Let's see what it does settle at, but that's the visuals coming from for you live from the BSE, wherein the listing of Piramal Pharma, the demerged entity, is taking place right now. 200 rupees is what we can see on the ticker. Let's see when it updates what really comes up, because the street was banking a lot when it comes to Piramal Pharma. The CDMO business is the most important part of the pie, and that's something the street is watching out for. They've also guided that going forward, revenue growth is going to be around 15% and the margins are going to be 25 to 28%. But for now, it's seeing a tad bit of temper start just around that 198 mark. But coming back to our conversation with respect to what's happening at Tata Communications and the performance this quarter, now assuming that the supply chain issues do get resolved, then will the same lead to higher revenue growth for the company going forward? That was the key question that we wanted to understand from you.
The supply chain, at least for this quarter, what we have seen is it has not materially impacted our revenues. It has not worsened, but at the same time, it is not getting any better. And given that situation, we have taken a lot of steps to mitigate from the risks of not being able to deliver, from not being able to realize our revenues from the orders booked. So to that extent, the supply chain, we are treating this as a business as usual for some more quarters to come, which is what we think it will be. And until then, it's hard to say what impact it would have, but we have taken all the steps to make sure it doesn't have any negative impact on our revenues.
All right. And what about employee costs? Because they too have been increasing over the last few quarters. How are you seeing attrition as an issue? Are you seeing any signs of it peaking out?
In terms of the employee cost, yes, it is increasing for several reasons. I think we mentioned that we are investing in sales, we are investing in strengthening our product teams. So we are hiring people, and therefore the costs are increasing. We are also investing heavily in training our people. We have over 1,000 people on artificial intelligence in the company. So we are training people as well as, so the people-related costs are going up. As to the question on attrition, like any other company in the tech industry, we have also had our share of the problems, but we have put steps in place. So again, attrition, it is not getting any worse, but we are, keeping a very close watch to make sure that, the situation, our attrition numbers don't get worse. But the attrition levels are still high compared to, the pre-COVID levels.
Now your capex target for FY23 has been elevated to 300 to 325 million. Where is this capex going to be deployed? And are you facing any supply chain issues because of which the capex deployment is also going to be delayed?
Yes, we had said that we would invest in our networks, invest in our platforms, and therefore we had allocated and approved a higher capex. There is a challenge in terms of deployment of that in our networks due to supply chain issues, and therefore this actual cash spend on capex is somewhat lesser than what we had planned. But we are going to continue to make our plans on the basis of this levels of investment into the future as well.
Okay, and what kind of synergistic opportunity do you see within the entire Tata Group? Anything that you can do with Tata Teleservices, etc.?
In terms of synergy within the group, clearly, one of the key themes, that the group chairman Chandra has been driving is simplification, and synergy is another part. So synergy is something that we between the group companies are strongly working on to see where the synergy possibilities are, and there are many synergy opportunities that we have worked on. For example, the 5G lab that we have set up in Pune is being leveraged by a lot of group companies. We would be jointly working on use cases that would benefit the Industry 4.0, and there are a number of other synergy projects that between the groups there would be collaboration on. So that is the extent to which I can talk about the synergy in the group.
Okay, Mr. Lakshminarayanan, we'll let you go on that note. Thank you so much for joining us and talking to us about how the business outlook is looking like.